Hello, and thank you for joining us at MonsterMortgage.ca's video blog this week. My name is Cocciollo, and here we're talking about the new mortgage rules and how they're going to affect you, the consumer, and the market overall. A lot of people are having a lot of concerns about how it's going to affect housing prices in the near future. And I think a couple of things that people have to realize is that it's going to really affect two basic components of the market. One is small business owners, because nowadays with the new mortgage rules, small business owners have to really justify their income, and we all know that small business owners don't necessarily tend to claim on their notice of assessment on their tax return the actual money they make. So you're going to find that it can be a little bit more difficult in order for small business owners and self-employed to get financed. So you have to be prepared to, number one, either supply more documentation, pay more tax, or deal with alternative lenders, which we can talk about next week in my next video blog. Another facet of this it's going to affect is the first-time home buyer. They're saying with the new mortgage rules and having a 25-year amortization and the tighter debt servicing ratios that not only lenders but insurers are looking for, along with the regulators, you're going to find that's going to probably take about 60% of the first-time home buyers out of the market for the next couple of years. Simply because, number one, housing is a little bit more expensive than people like to tend to believe, and for those first-time buyers to actually afford that may need to save more money for down payment or pay off debt they already do carry right now. So in order for them to qualify, it's going to take a while for them to get back into the marketplace. What does this mean overall? It's going to have a bit of a trickle-down effect, especially for those who are a move-up buyer. They're going to have to put their house on the market a little bit longer. They're going to have to be a little more patient, and also might have to negotiate their price a little more. And Lord knows no one likes to negotiate their price. So you probably see that housing prices will slip down a little bit. And that's not all bad news. Another thing is they're finding is condos are getting way too expensive. People used to use condos as an entry price point. With these new mortgage rules and the amount of investors that have money tied up in condos that can't get financing, you'll find more and more of them are probably going to try to sell them rather than keep them as rentals or find alternative lending to get the mortgages from. But that's going to drive the price point a little bit higher for them to carry that. So most likely they want to get rid of them. So you'll find that supply in the condo market will most likely increase over the next little while, and prices may slide down. But right now, the entry point for a condo is just way too expensive. You're looking on average $600 a square foot, where back in 5, 6, 7 years ago, you can buy an entry-level condo of 900 square feet for about $250,000 to $300,000. Now the same condo is $400,000 to $500,000. So this isn't all bad news. It seems like it's a lot of bad news, but the truth is, most likely the market's going to end up balancing out. It's going to be more of a buyer-seller market rather than just either a seller's or a buyer's market. Second of all, for long-term investors, you're going to find that because it's going to take longer for first-time home buyers to get into the marketplace, rental markets will probably be very, very strong in the next couple of years. And if you already own a home, the good news is this all keep interest rates low for quite a while. So you don't have to worry about rates going up anytime soon. Well, thanks for listening to this week's video blog. My name is Cocciollo, and stay tuned for our next one. Thanks very much.